All right, guys, it's your boy Max Forex. In this video, I'll be talking about risk management. No matter the kind of strategy you trade, can be SMC, ICT, supply and demand, support and resistance. I'm not interested. Liquidity entry, I'm not interested. If you don't have a proper risk management, then you will not last in the forex market. I'm very sorry about that. You won't last because you don't know how to manage risk. Okay, so in this video I'll be talking about that. And before I go on, like and subscribe to the channel, leave a like, comment, and all that. Okay, it will help the algorithm to show this video to some trader that needs it. Now I want to promise you something. At the end of this video, you're going to take trades that you will know exactly how much you are going to lose, and that will give you an edge over the market. It will make you to be less, tensioner when taking your trades and all that. Okay, so I'll be sharing my screen with you. I'll do everything quickly, so that we go into details. Okay. All right, now it's okay. All right, so let's go. I hope you are seeing the chart, right? Okay. Now, what is risk management in the forex market? Risk management is the ability of a trader to cut his losses and increase his profits. It's as simple as that. When you can cut your losses and increase your wins, it's as simple as that. That's what I mean by risk management. Now, before we talk about risk management, I want to talk about lot size first. Technically, we have three types of lot sizes. There are actually four, but the fourth one is not used in forex. It's used in synthetics. So we've got nano lot size. Okay. Now we have types of lot size. Pay attention because I'll be going in details. Okay. Lot size and values. Okay. Or and dollar equivalent. Dollar equivalent. Those of you that are in a hurry, you can go and dollar equivalent. All right, now I'll break this down into the following. So the first chart will be, okay, this will be lot size. Okay, this will be lot size. This will be value, units in value. Okay, and then I'll also go on with the next one will be dollar equivalent. I don't need to talk. I don't talk too much. Okay. All right. Now, I want to pay attention to what I'm doing. Pay attention to what I'm doing. Because if you don't know all this, you will not be profitable. All right. So we have that. Let me also clone that and take this out. Okay. I want to divide this. All right. I'll be very quick in the video. So pay attention. Don't be all right. Now, let me also do this. Boom. All right. Now we have three types of lot sizes. Okay. The first one that we have, the first one is what we call a micro lot. We'll start with that. Now, this micro lot basically, okay. Okay, let me, all right, equivalent. Let me do this. Let me make here range. All right, I know what I'm doing. Pay attention. Okay, range value. All right, now we have micro lot size. Okay, Micro means small. So the units in value for this micro lot size is 1,000 units. Okay, 1,000 units. So for every trade that you're placing is that micro lot is equivalent to $1,000 okay, or unit on that trade. The dollar equivalent to a micro lot size, okay, is 10 cents. You know, this is how they write it. 10 cents, right? Let me see. All right, 10 cents. Okay, let me make it let me use my technical skill. So 10 cents, there'll be a stroke. I'm sure you're aware there'll be a stroke there. Okay, 10 cents. Let me just cross it this way for you. 10 cents. Okay, that's how they write cents. 10 cents per micro lot. The range in value for that 10 cents for that micro lot is 0.01 to 0.09. Okay, let me, you know, so from 0.01 to 0.09 is a micro lot. Now, what do we mean by this? If you place a 0.01 lot size on any trade, you are going to be getting 10 cents per pip. Okay, and that 10 cents per pip is equivalent to 1,000 units. All right, the next type of lot size is the mini lot size. Mini lot size, okay? And the mini lot size is technically equivalent to 10,000 units, okay? So it just times 10 of this, all right? So that is a 10,000 units. All right, let me think I've deleted that stuff. So this is for a mini lot. All right, so the dollar equivalent to this, okay, is, okay, dollar equivalent to a mini lot, okay, is $1. It's $1. Okay, yeah, it's $1. Let me take that sign. I'm coming. It's $1. $1. I'm coming. All right. It is how they write it. $1. So for every mini lot you place, you'll be getting $1. All right. Now this $1, the range for that lot size, the lot size that you are going to place to get this $1 is 0.1. Okay, pay attention. 0.1. So from 0.1 to 0.9 is classified as a mini lot. So as the increase in pip will be increasing your loss. So for instance, if the pip moves 5 pips, you are going to get $5. All right. All right. But in a micro lot, if it moves if it moves 5 pips, you're going to get 50 cents. All right. The last type of lot size which I'm interested in will be the standard lot. The standard lot size. Pay attention now, because it just where I want to start. The standard lot. Now, standard lot basically gives you 100,000 units. Okay, 100K. All right, that is times 10 of that. 100,000 units. All right, 100,000 units. I think I have to take out some, right? This is more than that. 100,000 units. This 100, 10,000, all right, 100,000 units. Okay, now for every standard lot size you place, you are going to be getting $10. That is a dollar equivalent. $10, okay? That is a dollar equivalent to it. So if price moves 5 pips, okay, in your direction, that is 5 times 10, that is $50. All right. The lot size equivalent to that is 1.0 rather, okay? 1.0 lot size is what will give you $10. Now, having known all this, how do you not calculate how much money you are going to lose? Pay attention, oh, and how much money you are going to get if price goes in your favor or if price goes against you. Okay, all right. Now, let's assume, pay attention, oh, the formula that you are going to use, okay? Let me make this bold. So much I'm not saying that. All right, all right. This okay now. All right. Now, how do you calculate your lot size? How much you are going to lose and how much you are going to get? The formula for that is this. To calculate how much you are going to lose and get, okay? So I'll call it gain. For gain amount, okay, you are going to be using, okay, for gain amount, you are going to use, the formula will be, I'm coming. The formula will be, so the formula will be number of pips. I'm coming. Number of pips, okay? I'm having network issue. Number of pips multiplied by, let me make this, I'm coming. Okay. Number of pips multiplied by, okay, so number of pips, I'll make that point since I mean mathematician, multiply number of pips multiplied by, okay, your lot size. Your lot size, okay? All right, so if you are to know the amount of money you are to get, you are going to multiply the number of pips that you want to risk with your lot size, which is all this, to get your dollar value after you've known the amount of money you want to risk. All right. Then the next one will be your loss amount, which is your stop loss, okay? Your loss amount, pay attention, oh. Your loss amount will be, okay, will be number of pips. Pay attention, oh. I will go to the chart. Pips times, okay, lot size. All right. So to get the amount of money you are going to lose, you have to use loss amount will be equal to number of pips times lot size, and then gain amount will be equal to number of pips times what? Lot size. So let's assume, pay attention, pay attention, pay attention, pay attention to what I want to say now. Let's assume that you have an $100 account. Okay? Pay attention, pay attention. You have this account and you want to trade. You don't know how much you want to lose, but you just want to trade. Now, for you to determine how much money you are going to lose, this is very simple. Now, of course, from this is your total balance, right? That is your total balance, your TB. Okay? So this is your total balance, $100. Now, you need to know how much money you have to risk. So let's call that risk amount. So now let's assume that risk amount RM. Okay, let's assume that you want to risk. Okay, you want to risk 1% of this account. Okay, now 1% of $100. If we go to my calculator, all right. Sorry, I'm going to click calendar. Sorry for that. 1%, 1% of that. I don't want to use mathematics. I want you to see how to do it. It will be 100, okay, times 100 times 1 is 1, right? It's still 100 divided by 100. Okay, that is 1. You cannot risk $1. It's too poor. All right. Let's also assume that you want to risk 2% of that account. You want to remove 2% and trade. So it will be $100 times 2. Okay. I don't want to use mass and do everything. Divided by 100. Okay. You have $2. So if $2 is what you're about to risk, it's too small. Okay. Let's make it $5. All right. So that is 5 times 100 is 500. Okay. 500 divided by 100 is 5. All right. It's 5, right? So, okay. Let's now come here. Now, still on this calculator, your risk amount here, okay, we said is what? How much do you want to risk? 5, right? $5, right? Right? Because we use 5%. So your risk amount here will be 5%. Okay. 5%. That is your risk amount. That is the amount of money you want to lose from this account. And this 5% is equivalent to what? 5 watts. 500 watts dollars, right? Okay. And is this risk amount. 5% is what? $500 divided by 100. That is 5. All right. So 5% is what you want. All right. So you want to lose $5, right? That's what I'm saying. So if your risk amount is $5, pay attention. Pay attention. Now that you've known that you want to only risk $5, that means if price goes against you, you will lose $5. Then if price goes in your favor, based on your risk to reward ratio. All right. Okay. Now, pay attention now. Remember that we are our total balance is $100. And we want to lose $5 if price goes goes against us. So let's go to the chart now and let me show you. Right, this chart. Let me show you. Let me show you. All right. Now, there's no need to even go to the chart. Now, let's assume you bought. Let me bring my. All right. Now, look here. I will use this as an example. Let's assume you bought any pair at all. Any pair at all. Okay, you can do this. Now, if you look at this, this is a AUD card. Okay. If you look at the pips, you will know very well that for AUD, we calculate our pips based on 2 numbers, right? So this is I'm coming. This is 10 pips. You see, after this 0.0, we are taking only 10. This is 10 pips, all right? This for AUD card. Every pair has its own way of calculating pips. So depending on the pair you log. Now for your target, you can see you have 0.032. That is 32 pips. With 32 pips as your CP, and then your stop loss is what 10 pips. Now let's assume that you want to trade. This is you want to risk 10 pips as your stop loss and then get 32 pips TP, all right? Knowing fully well that if price goes against you, you are going to lose $5. And then the price goes in your favor, you are going to get times, maybe 2 times, depending on your risk to reward ratio. Now, this risk to reward ratio, you can see that is 3.17. So technically, if price goes in your favor, okay, you are going to get 3 times 5 is 15, right? So you are going to get 3.17, okay, times 5. That is your budget. So you are going to get $15.85. But if price goes against you, how much are you going to lose? You don't know. All right, let's use our formula. Now, remember that this stop loss is 10 pips and your TP is for 32 pips. All right, let's go to the calculator. Now, our risk amount is already $5, right? So now the question you are going to ask yourself is this. What lot size? Remember that this account is 100, so it's still under, to me it's still under, it's just between mini lots and micro lots. Because you can use 1.0 on some broker, but for risk management, let's use the micro lot. So now you want to know how much you will lose and then how much you will gain, right? All right. So now the question you are going to ask yourself, since you already know that you'll be risking $5 for this trade, eh? All right. The question is, what loss size, what micro loss size times this peak here, this stop loss peak will give you $5. I will take that again. You're going to ask yourself this question. What lot size, is it from 0.01 or 0.02, 0.03, 0.06, will I use to multiply this my 10 pip stop loss to get $5? All right, let's now go to the calculator. If you are gaining value, like and comment. Okay, now if I use 0.01, see, if you just watch this video again and again, 0.01, if I multiply it by 10, because my stop loss size is 10. Now take note again. Take note again. We don't multiply, pay attention. We don't multiply the loss size itself by the pips for the stop loss. We use the dollar equivalent, because if price goes against you, you are not going to lose your loss size. You are going to lose your what? Dollar. Am I talking here? So you are going to now take note, for every 0.01 loss size, you are getting 10 cents. And this sounds the right 10 cents. I don't need to talk too much. So now we are not multiplying the loss size by loss size by the pips, by our stop loss pips. We are multiplying the dollar equivalent, because if price goes in your favor or goes against you, you are not going to lose your loss size. You're going to lose your what? Your dollar. So for 0.01, if I'm using 0.01 now to test, pay attention. Remember that loss amount is what? Number of pips times what? Lot value, right? Let's go back. Loss amount will be number of pips times what? Loss size. Loss size here, in quote, is your dollar equivalent. I repeat, the loss size is, in quote, your dollar what? Equivalent. So technically, if I go to my calculator, I hope you are seeing the calculator. If I want to use 0.01, 0.01 is 10 cents per pip, right? So instead of me typing 0.01, okay, times 10 being my stop loss, I am wrong. I am totally wrong. Why am I wrong? Because we are not losing our stop loss, we are losing our dollar. So we are going to use, for that 0.01 loss that you want to test, it will be 0.1 or 0.10, which is your 10 cents. Yeah. Because this 0.01 is equivalent to this 10 cents. You multiply it by that 10 pip stop loss that you have here. Okay. And it's what? $1. $1. So that means if market goes against you, brethren, you are going to lose $1. Would you take that trade? Would you take it? Let's assume you want to get you want to lose $5. So that means we are going to use, technically, we are going to use 0.05. And 0.05 is 50 cents, which is this. If you multiply it by 10, you are going to lose $5. So for this trade now, I am going to be using 0.05, so that if price goes against me, I will lose $5. Then the price moves my favor, I will get $18.85. Am I talking here? Now, if you are scared that this your stop loss is too tight, if I increase it now this way, you can see that my stop loss now is now 14 pips. After the 0.0, we are taking 14, okay? It's now 14 pips. No problem. I can still use my normal loss size, okay? So since my stop loss peak is now, okay, 14 pips, all right? So if I use 0.5, which is 50 cents, that's equivalent to 0.05. If I multiply it by 14, you can see that I will lose $7, which is I've broken my rules because I want to lose 5% of my account, but now I'm losing 7%. That is a sign of indiscipline. So I'm not going to use 0.05 anymore. Am I teaching here? So instead of that, I'll use 0.0.220, which is what? Equivalent to what? 0.02. It's 20 cents. So if you multiply it by 14, technically, we are going to get $2.8. I'm still below my target. I can still take this now. Now, just imagine you taking this trade now using 0.02. Okay. Now, if this is your, if you want to take it actually, okay, what will be your profit? Your profit will be 2.17 times your targets. Okay. What I'm saying is, if your risk amount is already $5, and then your risk to reward ratio is now 2.17, you just multiply it by 5. That would be 10 point something dollar. Okay, so if you're using 14 pips stop loss here now, for instance, if price goes against you, you're going to lose $2.08. Then the price moves your favor, you're going to get $5. So it's I mean $10. So it's something that we need to look into. Let me also increase this. Now let's assume that, I hope you are paying attention. Those of you that are not following me, this video is the best video you ever get. Now let's assume that your total balance, for instance, is now $5,000. You bought an account, a Profem account, okay, $5,000. Now, of course, you cannot be risking $5, okay. All right. Now, let's assume you want to risk 2%. 2% of $5,000, okay, is 2 times 5. That's $100. Yes, 2%. Okay. So 2% of $5,000. That is 2 times 5,000 is 10,000. Okay. 10,000 divided by, okay, 100. You will get to 100. So now, if it is 100, if your risk amount is now $100, that is the amount of money you want to lose if price goes against you. All right. Good. So now, of course, remember that for some pro firms, your daily drawdown is 5%, right? So let's assume that this is a pro firm account, and my daily drawdown is now 5%. All right. If you are gaining value, please like and subscribe and comment. Now, let's assume this account is a Profem account, and then your daily drawdown is 5%. 5% of $500 is what? Is what? 250, right? Because 5 times 5 is 25. So you are not expected to lose $250 on this account a day. If you lose that, you have to stop trading until the next day. But if your mind no agree, you want trade, you blow that account. Okay. All right. So your daily drawdown is now $250. So that means you are not expected to lose this amount of money a day. If you lose it, just stop. and trade the next day. That's the meaning of daily drawdown. Now, technically, I want to do $100, but now my daily drawdown is 250, so I'm still safe. So if I want to use 0.05 on this account, because of this my risk amount now, okay, I have $100 to trade with. All right, now this $100 now, my loss side of course $100 is still under a micro lot. Okay, so if you use 0.05 on this trade, which is 50 cents, right? I've talked about that before. So this is 0.50, okay, times, let's assume that this is your trade and your stop loss is now 14. So if you multiply this by 14, if price goes against you, you will lose this amount. I'm coming, times 14, you will lose $7. Okay, and then the price goes in your favor, you are going to get 2 times 7, that is $14. And you can see that you are below this, so you can also increase it to 0.90. That is, you're using 0.09 loss side. If you multiply by 14 now, you're going to lose $12 something. Okay, $12. Okay, so that means if price goes in your favor, you're going to get 2 times 12, that is 24 point something dollars. Okay, so guys, if you want me to do another video on this, please put it in the comment section. Okay, all right, I will see you guys. So I hope you gain value from that simple illustration of risk management. So in my next video, I'll do another one. All right, see you guys.